Hi everybody, Ken Heinz here, HFR President with the HFR 500 January 2023 Performance Snapshot. Happy New Year. The industry got off to a very good start with a gain of about 2.5% in the month of January. And we saw a very different market environment prevailing in the month of January, really total reversal of a lot of the trends that we saw in 2022. We still saw higher than usual, higher than historical correlation between equities and bonds, which was really a challenge in 2022. But in this sense, they were correlated in a positive manner. And really, we saw gains across the board with regard to hedge fund strategies led by directional, higher beta, equity and event-driven strategies, but we saw gains across all strategies, including relative value arbitrage and macro, 2022's leading area of performance. The biggest shift that we saw with regard to the drivers of hedge fund performance for January 2023 was really shifting and moderating expectations for moderating the inflationary pressures which really defined 2022. We saw that in January, and as a result of that, we saw people positioning for moderating expectations for interest rate increases in 2023. And as a result of all that, the pressure that put on the overall economy also moderated, and we saw strong gains really led by technology equities, but we see that show up in equity hedge and event-driven equity hedge gaining 4.3%. 3.8% gain in the HFR 500 event-driven. That was really supported by gains across all the event-driven strategies, distressed, shareholder activist, special situations, M&A related activities, really after a really bad year in 2022 in terms of the M&A environment. People have expectations for a lot stronger year in 2023. And we also see those obviously well ahead of equity benchmarks, 2.8%. The overall composite gaining about 2.5%, and really mixed performance in the macro strategies. Here we have the composite down only 17 basis points, but that was a mix of systematic declines, whereas fundamental strategies posted narrow gains. And then we saw fixed income based relative value up 1.75% in a month when, as you know, interest rates fell as the expectations for inflation also declined in the month. Looking one level deeper into the drivers of hedge fund performance, drilling down to the sub-strategy level, we see here leading area performance really in the equity hedge multi-strat. And that's funds that really have portfolios in all of the different 6 or 7 equity hedge sub-strategies there, funds that have all of those. You can see that gained about 6.6%, 6.5% in event-driven destruction. We talked about that earlier. Obviously, a better equity market environment, moderating expectations for the economic weakness over the course of the year, and of course, an improvement in access to capital for those restructuring and distressed activities led to a gain of 6.5%. And again, distress is typically very idiosyncratic. It doesn't have a real direct correlation with high yields. Sometimes people think that, but really fundamentally is driven by the developments in those distress and restructuring situations. Equity hedge fundamental growth, obviously that is heavily influenced by technology equities, emerging market equities, and growth-oriented equities overall. You see a gain there, 6.125%, and then 5.4% in the event-driven activist index. And again, we saw a lot of M&A activity. We saw what's going on. A lot of activists get involved in situations like Salesforce, and we expect more of that type of activity to transpire over the course of 2023. Really expectations for strong performance there. And then lastly, fundamental value, again, similar to fundamental growth, but obviously lower PE holdings there. Strong month there in excess of 5%. So really across the board, strong sub-strategy performance, well ahead of the gain of U.S. equities for the month. Briefly touching on the outlook for hedge fund strategies, hedge fund performance and strategies for 2023. Outlook's very strong across all of the different strategy areas. really led by relative value arbitrage. I think there's 2 points here that we'd like to make. One, we have a higher level of carry, much higher level of carry than we began 2022 at. In addition to that, a lot of people came into the year with significant amount of pessimism with regard to not only the overall economy, but the inflation environment and the expectations for more hawkish behavior by the Federal Reserve. And I think that we've seen those moderate over January. And I think that as that continues to happen, we expect to see strong performance in fixed income based relative value. A lot of the same applies to event driven, with the additional bonus of that the strong M&A environment and the strong US dollar sort of come together and create, I think there was a real dearth of activity in 2022, and there's a lot of latent demand for strategic transactions, which we expect to see, in addition to what we've already seen in January, which is a lot of shareholder activist activity. Equity hedge, obviously strong start to the year in 2023. We don't expect a repeat of 2022. And again, this is an area that most institutions are allocating to the hedge fund industry to reduce their equity market beta. And I think that we'll continue to see that with a lot of sort of institutional rotation strategies out of long only beta and into equity hedge strategies to reduce that equity market beta. And then finally, macro, a good year in 2022 doesn't necessarily presuppose that if the environment changes that it would have a difficult year. Because the strategy is highly liquid and particularly in the systematic trend following area, those models can turn over relatively quickly and adapt to a new market paradigm. Just because of the strong environment of 2022, if we see a different environment in 2023, it can still be strong for the macro strategies. We have a lot of great resources on our website relating to the Investable HFR 500. We've taken a lot of calls from interested institutions that want to know more about this. So please visit the website, www.hfr.com. When you do get there, please download the Investor Guidebook. The guidebook really outlines a lot of use cases for the HFR 500 and how it represents a solution to common benchmarking challenges institutions face. So please download that. Please, if you're watching this video, you know that we do regular performance updates on YouTube. Please subscribe to the channel and let us know if you have questions that you'd like us to discuss on future updates. Please let us know so we can include them into the call. And obviously, if you have a question and you'd like to reach out to me, Ken Heinz, directly, you can send an email to me, or you can send to your regular representative at HFR, or if you want to set up a call to discuss any of the topics from this webinar, you can send an email to HFR500@hfr.com as well. Thanks, and look forward to speaking next month.